All right, my friends, now that we have three individual videos out explaining the little bits and pieces of our oscillation indicators that you see at the bottom, we're going to make a video on how to use all three of them together. And it is very basic, and it's pretty much exactly what you think. So this is going to be a pretty small, pretty quick recap here, but a lot of these, they can front run. They're all working together, right? And more catalyst stacking, the better. And these are usually used best at extremes with Fibonacci and weekly, daily levels compounded with those. As we come out with more videos, we'll be teaching all of that as well. So for these three indicators, you have RSI, TTM, and MAC on the bottom. When they work together, when we have big volatile moves leading up into huge resistance points, the over hot on the RSI works with the tipping over oscillation on the TTM where the buyers are stepping aside, mixes with MAC crosses, right? And looking at a 5-minute chart, it's a little bit slower. We like to trade off the 5-minute chart for larger trades, 1-minute chart for quicker trades that are going to be smaller scalp bias plays, right? So you can see on the 5-minute, it's pretty easily read together when these go dipping together, right? Like a low RSI, the RSI was much faster if you go straight down right here than the TTM and the MAC for this reversal move, right? And then if we move it to the 1-minute, these are going to look a little different. Move it back here a little. There we go. And this is where we like to read a lot of our range scalp moves from, real tight range moves. But the 1-minute being a little bit faster has a lot more availability for divergence. And that's why I like to stack a lot of these indicators, because the divergence of how these work help out with that eyesight. So for instance, on this early morning dump here, and it came back down to lows, right? We have a divergence in the RSI's indicator where we received a higher low. We have a low base here on that RSI, and then right above it, 5-6 minutes after, we have a higher low. And you can see that by where the overcooled section here became oversold. Then it created a higher low and then pressed back up to that 50 halfway point everything target we love here so much. If we look down, the oscillation of the TTM, right, wasn't quite ready to flip that flip either, right? But when the TTM started to show you sellers stepping aside with indecision, along with a higher low on the RSI, along with a MAC moving average cross, right? You had three indicators telling you essentially stacked at the same thing. Now, once in a while, and a lot of the times you're going to see a lot of these indicators kind of break apart and move independently. Maybe a data move or news or something like that disrupts these indicators. But when you can get them to stack all together like that and give you the signals, it helps out with catalyst confirmation and just the strength of the overall move, because we have multiple metrics working for us. So when we see the moving averages cross on a MAC along with an oscillation wave beat, so on and so forth, we have incantation of move. So right here, where all of these lined up on that move, and we would target a 50 waypoint, right, of a lot of these. And if you picked up the bottom here and moved up, and you would look at the time frames onto where some of these moved into target, this is where they kind of coincide and create divergence a lot of the times as well. So that first push in price action here, if you look down, that RSI was already at the 50 waypoint. So that is a very quick in and out in price action for RSI leading to the 50. But if you would have looked at the TTM continuing, right? So oscillation has still been increasing here on the buy side. There are no dark blues. There are no buyers stepping aside, but there is consolidation of the RSI during a strong TTM, right? And it's still having some headroom left on the MAC. And what I mean by that is that low where the MAC cross, we usually like to watch it come to the center line for a target during the price action. So when we seen everything dip from those bottoms and move up to resistance, we needed other indicators to kind of help us out. The RSI during consolidation was more or less not usable because it had already hit its halfway retrace, but the TTM being strong, and then showing us just a small pull wave into a new buy, and then the MAC never showing a signal cross and giving us further confirmation of the lines not crossing. That was a further inclination to hold that move, right? Because the 1-minute RSI, if the first target is here, second target is close to overbought, using the other indicators stacked here would have helped you hold that trade longer. And now when we talk about indicator reset, when we look a little bit right here, when stuff gets too hot, too cold, or consolidates for too long, we need the lines and systems on the studies to reset themselves, right? So when we go into, this is what the Biden news was on the debt ceiling, and it created this little bit of an algo jam up volatility. So when we look at the indicator resets here, we know not to trade through a lot of indicator resets. We wait for confirmation. So it's a bad idea to guess in the midst of some of these indicators where they're just too hot or too unreliable. But the reset for confirmation, which we'll cover here real quick, is something that you're going to want to watch for. So the pre-market, we don't have it on here because it's on the highs. We'll ignore that for now. I was going to say pre-market high target, but let's look for a little bit of the reversals here. We're going to go for indicator resets. We had a hot push here by Biden, right? And it flipped out pretty high. The TTM was already showing us a lower wave coming into this push. The MAC was already showing us oscillation backside pretty quickly here. The RSI gave us a much faster reading saying, hey, this pop is going to kind of jiggle down a little bit. And this becomes untradeable when they whipsaw it back like that. There's not reading these super clean. There is reading them after the confirmation, because most of my trades consisted of here and here for the confirmational hits to continue, where we made just under 20 some points, 29 points, 28 points, something like that on today and futures. So when we traded this, the confirmational indicator reset, it looks like this. It had this jumble, had this big mix. We don't really know what's going on here. We want to ignore that. But when we came into these smaller candles where the volatility stopped, the increased range stopped, we have the indicators now giving us signals. It came out of this lower range chop. It went super high, super low, right? Top range, bottom range, RSI. TTM and MAC don't do that too much, but this one did on the swap. And what happened was the RSI came back into the top channel. So that top channel here becomes uptrend dominant, right? So in an uptrend dominant, in an uptrend potential, when you see consolidation, we have to look to other indicators. So we have a small sell wave. Check out our other videos on how to read these. High buy wave, right? Oscillations higher. So we know buyers are in control here. In the consolidation, TTM wave is telling us, and the MAC is also on the top positive territory. But where's the best trade to set up here? Where's the reset, right? Well, you could have got in here and on some of these highs and averaged in and anything low. We had a really good price level on Fibonacci here. We have moving averages slowly separating, giving us the opportunity to move higher. But the back test on the MAC was the best confirmation, TTM squeeze and reset on RSI. RSI was probably the least. So I would go 1, 2, and 3 confirmational with points of interest of support up there. And what I mean by that is the indicator had went hot, showed you that it wanted to come back down on the RSI, showed you still in an uptrend. We were not trending in the bottom. It all just broke through a little bit. That doesn't mean much. It's got to start trend. But the MAC took its time on these highs right here, right? And it pulled all the way down to the zero line and gave you a no cross. This is a confirmational hold of the zero line on MAC, along with a TTM red dot squeeze section of consolidation saying there is a probability of this consolidation squeezing out. The red dots were sitting for a while. RSI wasn't usable as much, but this is why we use 3 different indicators. The reset on the MAC and oscillation waves on the TTM came from highs, from the resistance, right? Look to your left. Resistance, top from the Biden remarks, the debt ceiling. And then we had already beats on the buy side, small sell wave, already oscillation top side on MAC. The MAC just needed to reset to reposition a breakout. So the consolidation came, the TTM squeeze came, and the MAC came down to the zero line to produce the big run, and so on and so forth. It went hot for quite some time, right? And we also obviously had catalyst to do so. So when you get catalyst, indicators can stay hot and moving for quite some time, right? And now just a small little recap using these together, we'll go over the resistance move of today, where we had the 261 extension. This was a target from our hidden Fibonacci system. This was the top of the day on a 261. This is what we had watched for. So if you were looking for a little bit of a relax on a fresh push of the day where nothing is really pulled beyond moving averages, and we usually wait for that 200 SMA to catch back up. It's a huge target. We'll go over that in the moving average systems. But let's look at the indicators here that worked together. RSI and TTM and MAC all worked extremely well together. So what does that mean? You have 3 indicators telling you the same thing. So the probability of that thing they're saying has a high percent to work out, right? So high a day, right? Now look at this. Overbought conditions way up in the 80s plus on RSI. But when it started peaking into the 2618 double top, you notice the RSI was already giving you lower highs, right? All these base lows were cracked all the way down to the RSI. That's a great sign of steam is running out. Okay, same with the TTM. Let's take a peek at that. Heavy oscillation, huge waves. Went through one sell wave. Boom, boom, boom. What do you see there? Lower oscillation waves telling you steam is running out. Let's look at the MAC. overextension, moving averages crossed, now consolidating with what? Larger oscillation waves on the bottom of the indicators, right? So the waves were getting bigger. The sellers were coming in for the relax. Buyers were stepping out of there because they were taking profits into that 2618. Now that consolidation further load, and then once we crossed the zero line, even gave you further confirmation of trend down. Now look right here, RSI broke into the bottom channel. So for this whole entire time, we are downtrend dominant, right? Same with the MAC. Negative line broke, downtrend dominant. Look where it ended, right where the MAC crossed back up here. TTM, not really that big of a help, right? Not this time, but we do have big sell waves here that conquered that buy wave, but the MAC and RSI using tether gave you both channels on the downside. So the relax from that top, and I probably would have magneted pretty close to that 200. This is a little scammy, but it did end up hitting that 200. Came back down and gave you that pullback stacked onto other catalysts like the resistance of the 2618. Okay, let's look at one more example here for the Friday Powell dump. These are interesting because it's a good example of when news catalyst, fear, hype, and greed kind of take over, and we don't get really good indicator reads, right, at all. So this chop right here is in the unfilled gap on the weekly. This zone alone from here to here is going to be astronomically difficult to trade. So we need to be exercising caution, lower trade sizes, so on and so forth. Now, when we see the indicators start to jumble, right, we don't have a whole lot of indicators to use here, except for longer standing time frames. You can check out our prediction videos on how we've seen the short coming. But one thing sticks out to me in the RSI, and that is the amount of downside potential it has neared itself compared to the upside. The upside did not go over hot, so every time it went up, it got stuffed, right? Every one of these tops, it got stuffed, and it created a gap on that RSI where we were staying farther away from the top side of the RSI, closer to the bottom side. Very hard to pick that up, not very easy, especially in this chop, but it was there. TTM wave height helped out a little bit more than most at the start of the day. If you would pay attention to the first live wave, let's look at the wave height here, negative 29.5. Buyer wave, 25, not hot. Negative wave, 23.4. Buyer wave now beat out the prior, so that was a heavy wave. But then the seller wave beat out right after. So this buy wave got trumped, and this was the trade confirmation on the TTM because of the wave height. So right during this pop up, coming into this pop up, we knew weakness was coming in, right? TTM showed you this wave and then the sell here. How big is this wave? 37.8, this wave 30. So we're beating it by about 7 points right there. Pre-dump, this was at 9:45. So look at this wave, look directly up. That was in this section, okay? Pre-dump, the TTM oscillation was saying sellers were in control. Let's take a look at the MAC. MAC was way better than RSI as well. Broke into the negative line, came back up, retested zero line, trend down. Now, these points of interest used with the TTM would have been the trade, but look right here at this confirmation. It's a little later because it's already during the breakdown, but it does give us a trend line hit, okay, to help us with confirmational downside. But the TTM was the real winner there, along with leaning towards short MAC side. And RSI, again, more or less unusable, but stacking the other catalysts together, saying 2-to-1 or 3-for-3 in your favor, you would obviously not use the 1-to-2, like one RSI is working good, but TTM and MACD are not. It's stacking catalysts. The more you have working for you, the better percentages you have of that trade working out. So I hope that makes sense in the small example. Let me know if you guys got questions. I'll go over more, bring up more. Got a ticker we'll break down. Post it up and see you guys on the next.